Alright, what up, crackers? We're about to get into my strategy. We're gonna make this short and sweet. Let's make some fucking money. Alright, cool. Alright, so talking about day trading. The strategy works for ES, it works for NQ, it works for fucking Bitcoin. Never tried it on Forex. Probably works for Forex. This shit is goated as fuck. But let's get right into it. Alright, market open. First things first. You're a day trader, you know market open, New York market open. 9:30 a.m. motherfuckers, Eastern time, for everybody living in some other weird part of the world. Alright, so first things first, every day trader can attest. Right off market open, you're going to get manipulation to the upside. So we are going to test for that. So typically during market open on manipulation, you're going to get a market open, which can normally consist of a little bit of consolidation right before open, maybe a little bit push down, and then you're going to get a massive wick up, and this will be the previous high. We're going to fill above the previous high's liquidity, wick up, doji, most likely fall down, and then this typically happens every single day. You know, we do have the continuation where market just absolutely fucking rips, but hey, you got to lose to win a little bit. So first things first, my strategy, you're going to want to get a market open manipulation. That is a push to the upside, a push to the downside. That is not some fucking weird, I don't even know, trading sideways shit where we go up and then we go down and we stay at the same level, never break structure. That's not what I'm talking about. I'm talking about you wick up, fill liquidity, and absolutely sell off, inverse for value gap, break a structure, complete new trend, 100 points NASDAQ. All right, so first things first in the morning, we're going to get a market open manipulation. Inside that market open manipulation is going to manipulate into your key level, 1 hour, 2 hour, 3 hour, 4 hour, all the way down to 15 minute. If we don't have a 1 hour or 4 hour, you just want above the previous high. You're going to get a liquidity sweep at that level in an order block. If you don't know what an order block is, go watch my video on order blocks. If you don't know what a liquidity sweep is, go watch my video on liquidity sweeps. You're going to get a liquidity sweep and an order block. You're going to get that liquidity sweep and an order block into an inverse for value gap that normally leads right into the break of structure. So typically you get the inverse for value gap here and then the break of structure around here, right? So if you do get the break structure first, you can enter off the break of structure. But typically what I like to see is an inverse for value gap, then the break of structure. And after we get that, after the liquidity sweep in the order block, then we're going to target these key levels of liquidity down here. So this key level of liquidity can be a market open gap, new day, new week, any market open gap pretty much. Or, you know, 4 hour fair value gap, 4 hour equilibrium, 4 hour low, 4 hour high if you're taking a long. But yeah, I try to look for 4 hour, 2 hour, 1 hour for my key level of liquidity. Try to do higher time frames. We're not trading 1 minute piece of shit here, manipulation. No, none of that. We're trading general trends and we're spotting them in the market. These are 100-point trades plus. So we're going to target that key level liquidity. Typically, you know, 50 to 100 points away. It's a sweet spot around there. So let's go look at NQ and see our strategy. Let's go to 1 hour time frame. And let's look at some freaking examples, boys. Let's go to 15 minute actually. All right, this morning we ended up losing this trade, but we're not going to talk about that. Market open manipulation. Oof. Let's look at, here's a great example of a trade right here. Recent highs. Recent highs. Market's going to want to seek out this liquidity on market open. Boom, look right here. Market open right here. Candle wicks up. Boom. Sweeps above these highs. And we short and get a freaking 60-point trade right here. Full take profit. Strategy working out every single time. Now let's drop to the 5 minute time frame on this same exact trade. Let's see where it is. Sorry, I'm a little geeked right now, boys. Boom. Accumulation at those highs above our liquidity level, above the previous high, which is marked right here. Correct? Make the new high. Close at the new high on the 5 minute. We come down. We inverse this IFVG right here. Boom, IFVG here. Break a structure here. You can enter at any of these possibilities. Boom. Or you can enter here for another confluence. And boom, let's see how many points you would have got on this trade. Enter at the break structure. There's your 100 points right there. Sweet spot. 50 to 100 points. Fucking sweet spot, boys. Seeking liquidity. We're seeking the liquidity. The market needs volume. It needs liquidity to move. So if it doesn't have liquidity, it's not going to move anywhere. So it's going to want to test those levels. Stop gambling when you guys are freaking trading. Find those key levels before you even take the trade. All right, let's see. This is a really good example of market seeking liquidity. Pushes above these previous highs right here. Market manipulates the upside. Great example of an order block and a liquidity sweep. Market manipulates the upside. Market open. Let's see. 5-minute IFVG right here. 5-minute IFVG. Market opens, manipulates above that high, inside a key level. That's clearly a key level. Look at the previous high up here. We're perfectly inside that key level. Market manipulates up to that high, sells off, inverses this IFVG right here, creates another one there, and we literally sell off. Here's the breaker structure here right after, and boom, there's another breaker structure here, boom, and we literally just sell off. Like, it's the same thing every single day. Keep it simple, guys. Stop overcomplicating. Stop trading with these strategies with all these fucking indicators. All right? You're going to enter off an inverse or value gap, a breaker structure, a liquidity sweep into a high time frame key level. Okay? That's 15-minute, 1 hour, 2 hour, 4 hour, fuck, even the daily time frame if you get into it. Then you are going to target key levels of liquidity. Previous lows, like this trade, for me, if I would have taken this trade, I would have targeted this level here. This low, and we would hit full take profit. Or I would have targeted all these levels on the way down that are creating new lows. This is all liquidity. All liquidity is, and where liquidity lies, is above highs and below lows. So stop overcomplicating where liquidity is. Fibonacci's great, but don't jump right into that, guys. Like, you gotta learn the complete basics. All these levels right here, these are all high levels of liquidity. So when I'm in this trade, I'm watching every single one of these levels and knowing, okay, we're either going to sell or we're going to rebound like we did right here off these levels of liquidity. Boom, rebounded off this level of liquidity, filled liquidity, pushed up, went to this top of this liquidity that we just filled, right back in. That was inside a 5-minute gap right there, and then we sold back off. So you got to see where liquidity lies in the market. You got to know where people's stops are, where people's take profits are, and you got to catch the manipulation, wait for the whole actual trend to play out, and then take your trade. So when we're looking for these trades early market morning, I typically like to see the market doing this. I mean, you guys might not get this picture, but I like to see a push down, a kind of a push up, and then I like to see the market start rolling over. And what I mean by rolling over is, I'll draw it for you guys. It's like a cylinder. And it starts slowly rolling over, okay? That shows we're accumulating. We don't really know where we want to go. Accumulate. 9:30 market open is going to be right here. 9:30 is going to hit, okay? And the market's going to rip up, sweeping that previous level of liquidity here. Manipulation. This is what this is. And then we're going to sell off, breaking this structure, inversing all the way down. So if we know what's going to happen, you just got to wait for it. All right? You're going to take your entry every single day before 10:30 to 11. It's going to happen every single day. Here's another great example here. Here's previous highs. Here's one previous high here. Here's one previous high here. That's not the high, but still, it's a high. We're sweeping of liquidity. Here, inside a key level. I don't remember this trade. Let's scroll to 15-minute. Where is this trade? Why do we take this trade? Oh, 15-minute. Perfect. Inside a 15-minute IFVG here, key level liquidity above these previous highs right here, guys. So that I know it's not the very high up here, but we're still above these highs. Boom. Waited for the inverse for value gap right here. Boom. Got the inverse for value gap. Entered my trade right here. Inverse this next gap on the way down, and you can see we hit full take profit down here. Let's see how much we did on this one. At a minimum. We got 80 points. So I don't know what the fuck you guys are doing. If you guys are still blowing funded accounts, like, it's not that fucking hard. Like, look how big this trade is. And my stops are literally above these IFVGs, bro. Like, they're not massive. Like, it's not like my fucking, the IFVGs right here, or my entries here What the fuck? It's not like my entries here, my fucking stop's above here. Like, my entries here, here's the IFEG, my stop is right above it. Boom, my take profit's down here. So it's like we get this inverse, and it normally just sells off, and we don't go into much drawdown at all. Like, if you can avoid going to drawdown, like, you guys see these trades play out every single day. You guys get caught by the manipulation. It's because you're rushing your trades. Like, if you guys just stop rushing your trades, like this, bro, fucking literally a perfect example. Market starts to roll over. Market open comes. We wick up, manipulate to the upside above these highs, right? And then we sell off. Like, that's what I like to see. So be patient with your entries and fucking really wait them out and just take the same entry every single day. It literally happens in the market. If you don't get it, if you're not anywhere near any key liquidity zones, the market's not going to really have any big push anyway. Like, if you're kind of just trading at just a normal level, like in between here, like, it's not like, okay, like you might catch like 30 points or 40 points. Like, if it rips up like it did, okay, all right, that was 200 points. Bad example. But if you're trading at a mid-level and you really have no liquidity levels, there's nowhere for the market to really go to fill that liquidity to kind of go to new highs or new lows. So it's like, all right, you're gambling your money off a fucking 20-point return. Like, the risk reward's not there. That's why I target these super key level liquidity trades. Like, I want it to fill as much liquidity as possible, and I want to fucking catch like a 200-point trade, 300-point trade. Like, I want to be in my trade like, oh my god, this is complete selling off. Fuck my take profit. Like, I'm gonna let this shit run. I'm already up 4 grand. Oh my god, I'm up 5, 6, 7, 8, 9, 10. And then you guys see a video on Instagram and you're like, oh, Doss just made 10 grand today. So if you're taking the same entries, like this one, a bit of bad entry right here. So for you guys that are about to watch this YouTube video, the day is January 12th, 4:35. You guys can watch this trade play out for yourselves. It's not market open, but let's go on a 5-minute bit. We have an IFBG we can enter off of. Yep, right here. We're above a key level. IFEG right here. How many points would we be up if we follow my strategy? Oh, there's our 50 points right there. We'd be up 50 points, and we would fill into this gap right here, and now we're making lower lows, lower highs. So, or lower lows, sorry. So, I mean, there's the fucking strategy. It works. Genuinely study it. If you guys want to go more in depth on it, DM me, and we'll go more in depth. But, bro, literally just keep it simple and keep it effective. Do the same thing every day, and stop being a bitch, bro. Wait for your entries, risk that money, and trust your strategy, trust yourself. That's all I gotta say. Yeah. So, peace out, boys.